Hi everyone, welcome to my channel, The Truth About Real Estate Show for Canadians. I have here today Andrew Kim, CEO of Share, and we're going to talk about Subject 2. Andrew, tell us about Subject 2.
Yeah, Subject 2, or they'll sometimes call it Sub 2, are deals where you find that they have lucrative returns only because you're buying the house from a seller and assuming their mortgage. And assuming is sort of softly used, but so basically you're buying the house, you're taking the title and ownership, but now the seller, the reason why the deal looks good is because the seller has locked in an impeccable mortgage rate. So taking the title and then paying the mortgage on their behalf after the fact. So not building credit, but usually the numbers work out so well that it's worth it.
Now, straight off the bat, an American typically I see they save at least 1% on the interest rate versus a Canadian with no credit history. But we're talking about someone who probably has a rate in the 2, 3, or 4 percent range, versus I would have to be paying like over 7. So I'm saving a lot of interest.
Yeah, a ton. So for context, the U.S. mortgage system, you can get 30-year fixed. So, and then the refinancing opportunities or balloon payment windows are pretty flexible after a few years. So whenever the rates drop really low, a lot of Americans will refinance their home and lock it in for 30 years. So anyone who's done it like during the pandemic or pre-pandemic has locked in a really amazing rate for X number of years. So there's that option using their mortgage rate, or what I think you're referring to is the debt service cover ratio loan, which is the investor-friendly mortgage, which right now is around 7%. So a sub 2 or subject 2 with a person with great financing rates, let's call it even a 2 to 3%, allows you to get in for like less than half the capital.
So who wouldn't want that? And especially at the time of recording, the markets are a bit softer. There's more uncertainty than ever, especially including for Canadians. So my thinking is this seems like an ideal investment strategy for most Canadians.
Yep.
Because they can get a cheaper rate, much cheaper than they could ever get on their own.
Yep.
I'm seeing most of these deals where the seller is staying on as the tenant.
Correct. Yes.
So then the investor benefits that they don't, that there's no upfront vacancy. I'm seeing deals as well where the tenants are giving some upfront money as well.
Yep.
I've even seen some deals where they're giving 6 to 12 months of rent up front. Right, so
Yep.
that's good for cash flow.
100%.
And the investor also doesn't have to renovate up front either because the seller's staying. Other than anything that's critical, I had to do the roof for my own property, but I didn't touch the inside at all. And I'm not going to touch it until the tenant moves out.
Yep.
But I want them never to move out because there's no rent control.
Yeah.
Right. So there seems to be a lot of positives for why a Canadian should look into doing a subject 2 in the States.
Yeah, 100%. Yeah, I think you knocked on all those sort of direct and indirect values of getting a subject 2 in this market, right? So you're avoiding vacancy is huge. So you have this tenant that comes on, and the security deposit piece, want to kind of double click into that is, sometimes we will still run the seller if they stay on as a tenant as if they're a tenant applying. And if their credit score or financial strength isn't where we'd like it, yes, we can ask for a larger deposit, which now makes the downside that much more small. And what the beautiful thing is they stay on for a few years. As a tenant, we don't have the renovation budget. And ideally, when they leave, the interest rate market has returned to normal and appraisals have loosened up to be more realistic. And that creates that perfect storm in, let's call it 2 years' time, to when they've turned over the tenant, we renovate, we refinance. Now all of a sudden you've got this lift and you've deferred that renovation till that day. And then we go and refinance, and all of a sudden you've got a lot of equity you're pulling out down the road. So it is a stepping stone to a perfect storm.
Now, the subject 2 deal that I did, it was brought to me prepackaged with a bow on it. I didn't have to go anywhere. I was literally at my friend's cottage when I got the email, and again, the deal was already prepackaged for me. What would someone have to go to? Say an investor wants to do a subject 2 deal themselves.
Yeah.
How would they go about finding a subject 2 deal?
Yeah, you have to go to pretty deep lengths. I think you have to become essentially a wholesaler. So in the U.S., knocking on a lot of doors, figuring out who's trying to offload their home.
Yeah, mailers, cold calling,
Yeah,
Google ad campaign.
Yeah, and then you got to figure out what their financing strategies, and you still need to do all of the underwriting of the house, right? Understanding what needs to be renovated so that you can go back in terms of negotiating power, saying, well, look, I know you're thinking it retails for 275, but you need a roof, you need this, and then it becomes a negotiation game. And then negotiating the terms, right? Like how much of your rent up front, if you're staying on board, and calculating all those numbers because that all plays a factor. It's not just, oh, he's got a low insurance rate, but also what does the property tax look like? What is the change going to look like? How is everything going to affect your actual bottom dollar as you change ownership? So taking that into consideration is super important and it's a lot of work.
You have to convince someone to change ownership, yet to continue to hold the mortgage.
Yes.
From a Canadian.
Yeah. So you're talking, they're saying, hey, look, I'm going to let you log into my bank or my mortgage bank account and pay the mortgage on my behalf. It does require a lot of negotiation, a lot of explaining up front, and then making sure you're working with the right title companies to actually change ownership and maintain the documentation of everything.
Right. Versus you at Share, this is prepackaged for clients.
Yeah, we do this for our clients. We have special partners for these particular deals and how to underwrite it. It's not the same sort of thing as just finding a buy and hold opportunity.
And then finally, who is subject to not for? Who should not be investing in subject to?
So subject to is, one, if you don't have sort of the cash reserves. So we'll talk about the downside risk of subject to because you are not taking the actual mortgage on with your name under it. It's still the seller's name. If the lender finds out that the title has changed, they can recall the mortgage. So there's that risk. So you need to have the cash reserves to potentially backfill that while we get a mortgage. Usually we have a bit of a grace period and we can definitely find a mortgage to backfill. But if it's in today's high interest rate environment, you're talking from a 3% to a 7%. So you need to have a bit more cash to cover that gap, and then we'll go get a mortgage. So the downside's not that crazy, but we just ask that you have that kind of cash reserve, which may actually be your renovation budget that we kick down the road, right? So for those people that don't have that cash reserve, we wouldn't recommend the subject to. Again, even though it's very unlikely, I personally know people who have done hundreds and have yet to been called on any of their loans, but we just want to make sure that we don't have to bother you for anything. So definitely not that. And definitely someone who's not open to, let's call it, immediate gains for immediate learnings, right? If you are wanting to go very traditional route, go buy the home, DSCR loan, and that's it, probably not the right path because we do need to have special contracts in order to complete the contract of or closing of a subject to and the inheritance of this mortgage that you're taking on.
So if you like that, please like and subscribe. If you have any questions, put them below in the comments. If you're interested in learning more about Share and how you could potentially become an investor of a real estate property via Share, that you be the U.S. landlord, Share will put together the deal for you, including subject to, including all the ongoing management from beyond then. There'll be a link below as well you can click on and you can register for. And if you like this, please like and subscribe.